Andrew Waitman has spent 3 decades working in Ottawa's local tech sector, from his days as managing partner at Celtic House to dozens of board appointments to his present role as the CEO of Assent Compliance. Andrew has seen it all. Today, we tap into this vast experience as we gaze into a crystal ball to figure out what 2022 might bring for the local tech sector. Coming up on Techopia Live. Hello and welcome to Techopia Live. I'm Michael Curran from the Ottawa Business Journal. Today we continue talking to some of the most intriguing companies and their CEOs. We're doing this as 2022 gets underway. And in this episode, we want to really zoom out and take a look at the state of the sector, both on a global basis and maybe a bit more relevant to us from an at-home perspective here in Ottawa. And to do this, we've got one of the most experienced tech CEOs in the city. He was working way back when in the venture capital field and then at Pythian and now at Assent Compliance. Let's welcome him now. Here is the CEO of Assent Compliance, Andrew Waitman.
Hi, Michael.
There he is. How are you doing?
I'm doing well.
Good. And thank you. You know, Andrew, there really aren't that many CEOs. There's some great tech CEOs in Ottawa, but when I think of a CEO I want to talk to kind of zoom out, as I'm saying, it really is you. You bring a wealth of knowledge across all sorts of sectors. You've led various companies and other ventures and that. So, and been an investor, of course. So thank you for your time today.
You're trying to get me to drop the cheese.
Yeah, there you go. So, Andrew, we're not too far away from a big and maybe unfortunate milestone, which will be 2 years into a pandemic. That's going to roll up in 30 to 60 days. Just your general observations. Again, you're very well read. You think a lot about business. What do you think? Like 2 years into a pandemic for people operating businesses. Any general thoughts?
Well, Michael, it's a tale of two cities, right? It's a Dickens world. Okay, it was the best of times. It was the worst of times. So if you were in the right places, it's a staggering time. Asset valuations have gone, higher than they've ever been. Whether you're in real estate, if you're in construction, but certainly if you're in digital, it is likely that you've had, extraordinary times. And equally, it's been very, very tough on the hospitality industry. It's been very, very tough on a number of industries and people. And there's, when this all is written, even at the global level, Michael, poverty has increased. Okay, during this pandemic, and so it's going to have some destabilizing macro effects. Countries have suffered; the poorer countries have suffered, while the richer countries have benefited. And the little bit of the vaccine issues that you've seen. So it's important that those of us who have done well think about this and how we can contribute to those who have not done so well.
Andrew, we'll zoom back from that giant global perspective, zoom a little bit more in Ottawa. I think you started in the local tech sector maybe around the late 1990s. Do I have that right?
That's right.
Yeah. So you've watched the sector for a long time, like me, through that the .com and telecom boom, and then a little bit of a bust, and then a shift in Ottawa to SaaS. I mean, Assent Compliance is a giant example of that, as is Shopify and other players. And so what are your observations as we're here in beginning 2022 on the state of the local tech sector?
Yeah, so you're right, and it's 3 decades, and look, every single decade, the community has improved in a variety of ways, and whether we're talking about the size of the economy, the diversity of the economy, the diversity of our tech sector. okay, it not just being concentrated in Canada. Obviously, Shopify has had a tremendous, it's an unusual and very rare black swan, but it has had a very positive impact to the community, both in those who have sufficient money to take the risk to start other companies, to be angel investors, et cetera, et cetera. And, you know, as you mentioned, Michael, the region has attracted, you know, a significant amount of capital. And so all of those constituent parts are important to the success of the community. I would say one of the biggest recent things, which is this distributed workforce, and Assent is, you know, experiencing this, is we used to be very headquarters centric. Our mindset was that we dominated hiring in and around our headquarters. And now it is normalized and common for us to hire from New Brunswick to Vancouver. And that will change the landscape with regards to, you know, whether we're headquartered here or how we're expanding. And so that will have derivative effects. Now, you know, if you think about, I don't know if you tried to buy a place in Ottawa recently, but it's a bit crazy. So there's a lot of factors. I would say the last point I would make, and this is kind of a remaining gap, okay, Michael, is if you think about, you have to put Shopify aside for a second because it is a very rare, it's a Google-esque type company. We need to see more, you know, we saw $3 billion come into the city between 1998 and 2001, but we didn't see a lot of, you know, successful of that or exits and so on. We saw some. We're seeing a lot of money come into the community. We need to see more, what I would call, you know, 25 million, 50 million, and then the marker that I think that builds real community stability is $100 million companies. So I think that's something all of us should be coaching and looking toward more is, and, you know, Invest Ottawa does their scale up programs, but we really need to be looking for that resilience where companies have gone beyond that kind of 25 into the 50 and into the 100.
It's funny that number 100 million has been around for a long time. I remember when that number was thrown around in the Cognos days, by the
Yes.
way. Like Cognos had to get to 100 million, and
Yes.
that was going to be the point. So it's interesting you maintain that kind of milestone. When I asked you to think back a little bit in preparation for this interview on 2021 and where we're at, you used the phrase pirates and patriots. What do you mean by pirates and patriots, Andrew?
Well, okay. So how politically correct do you want me to be, Michael?
Stretch it.
So in any era, and I'm going to throw a few metaphors around, so get ready, okay? But in any era of economic cycle, booms and busts, okay? You know, the pirates are also turkeys, okay? So the pirates are the ones who are playing, and they're not really. So they're going to raise money, but they don't really, you know, they're not playing the wealth generation game. They're playing the ego vanity game. Okay. And it's like they're acting at being a CEO. They're acting at, you know, being this, that, or the other, but they don't really have the understanding or the intention. And, you know, you like, not to be, you know, too crude about this, but, you know, she's on trial right now. You know, Elizabeth Holmes never really fully understood what she was building or what she was trying to do. Or certainly she started out with a great aspiration. And by the way, you know, Bad Blood, which is the book about Theranos, there's a connection here in the city to that story in the sense that we have the world's leading point of care blood analysis person. You know, who started 2 startups, one of the brightest, if not the brightest guy I know, Imants Lukes, who totally understood that she, you know, was not getting there. So my term of pirates versus patriots, patriots who are genuinely trying to build businesses and create wealth for all stakeholders. They're the eagles. They're the ones who build the long term, the oaks, not the willows. And then, you know, there's the turkeys who in a good wind, everybody flies. And so it's often difficult to tell which ones are the turkeys and which ones are the eagles. But when the wind stops, as you know, it did in 2000 and in 2008, the turkeys hit the ground pretty hard. But the eagles continue to soar. So, you know, I mix a few metaphors there, but
Yeah.
that was my Pirates and
Let's
Patriots.
and let's count Assent as one of the Eagles that are soaring
Oh,
to new
yeah,
heights.
and Eagles are both people and contexts,
Yeah.
right?
Yeah,
Yeah.
good stuff. And I want to talk to you about valuations and M&A activity. But before I do that, we need to pause for a second just to recognize the sponsor of this episode of Techopia Live, Pearlie Robertson, Hill and McDougall. Tech companies must move at the speed of light, and they need a law firm that moves just as fast. Pearlie Robertson, Hill and McDougall has developed long-standing expertise in helping tech companies address their legal matters. As Ottawa's largest premier full-service law firm, Pearlie Robertson, Hill and McDougall has provided a number of specialized legal services for the past 50 years. Pearlie Robertson, Hill and McDougall's in-house legal experts can help tech companies with financing strategies, venture capital, private placements and public offerings, mergers and acquisitions, intellectual property protections, shareholder agreements, and much more. To learn more about how Pearlie Robertson, Hill and McDougall can help your company, visit perlaw.ca. And we're back with Andrew Waitman, the CEO of Assent Compliance, and we're going to talk a little bit, Andrew, about M&A, mergers and acquisitions activity, and maybe valuations. Maybe the two are connected. But I've been astounded at the number of companies for being sold, purchased. Is any observations? Is that just a factor of the that valuations seem to be way up in the tech sector?
So, market cycles are obviously, a key part of that. But, growth drives valuations, and growth sometimes needs to be non-organic, needs to be, if you look at Lightspeed trying to, get bulked up on the point of sale versus, Shopify's organic growth. It can provide competitive advantage if you can bulk up faster through M&A. And with these valuations, obviously sometimes you've got stocks trading at 30, 40 times forward ARR. That's a good currency. And then, as you know, the constellation models exist and are being competitive. So I think it's part of the cycle of the times. It's part of the abundance of capital. And it's just part of the abundance of innovation and creation that companies are pursuing. What have been, Michael, for the last 5 years, phenomenal returns in certain sectors, and SaaS you're very familiar with. The returns in SaaS have just been staggering. So there's anticipatory energy to build bigger and better.
And on the venture capital side, it wasn't too many months ago when OBJ and Techopia obviously were ringing alarm bells incorrectly, I guess, because we dropped off the top 10 list of VCs, and you've seen, by the way, Toronto just take it to a completely different level in terms of the amount of venture capital that's going into that city. And then suddenly, it's almost like 1999 again, 2000, because we get Full Script. These are all Canadian numbers, by the way, at 300 million, GAN at 190 million, Rewind, 2 deals worth about 100 million. Wow, that was a quick turnaround. Is that the way you think it's going to go, or is this just again a kind of a cyclical type thing where sometimes it's dry and then some companies are working up to it and the deals just hit?
There is, I'll suggest to you a couple of dynamics. So there is an enormous amount of capital, and capital gets drawn into high returns areas. And obviously technology is showing some incredible returns these last several years. So that draws in capital. But one of the things, Michael, that people don't fully appreciate yet is that wealth in the world is being created at quite a rate in even dysfunctional countries like Russia and China, et cetera. But what's happening, whether you go Turkey, whether you go China, or whether you go Russia, as places where wealth can be created, that money has fewer and fewer places to invest. And so what happens is that money starts to accumulate in fewer and fewer countries, which is driving up. So the wealth is generated worldwide, but there's no safe places those people want to put their money. And so North America, because of its judicial and financial and political systems, firms is attracting a disproportionate. So think of sovereign wealth funds, like Norway that has 1.3 trillion. They actually have less countries that they want to invest in, whether you look at the dysfunction of Venezuela, the dysfunction of, Turkey and China and Russia. So what's happening is wealth is being created worldwide, but it's being concentrated in what I would call more stable democracies. And so that's one thing that's causing elevation of assets in safer. And so that's why housing prices are being pushed up, real estate prices. There's other factors at play, but the entire, if you think about the entire tourism industry and the trillions that would have gone into that globally, that's being put into assets as well through savings and then those funds deploying capital. So there's just a lot of wealth that's being concentrated, and you've got asset inflation going on in more trusted countries.
And we're going to wrap up here in a second, Andrew. But just to stick on that venture capital question again, we're kind of obsessed with stuff like venture capital deals happening at the city and at OBJ and Techopia, and where that level happens to be. And again, we've seen Toronto kind of take it to a completely different level. Is that a useful metric, for tech CEOs to be thinking about how much venture capital is coming into the city, or is it just so cyclical we should just move on? And
well, and again, we can refer back, Michael, because you and I have been around long enough to know that we see these peaks and valleys. And, look, it engenders an opportunity to create wealth, because it takes wealth to create wealth. And it engenders innovation. It engenders an educated, a professional workforce, a digital workforce improving. And that being said, I think, we need to see more. I'll go back to my 25, 50, $100 million outcomes. So inputs are important. They absolutely are. But we probably don't spend enough time on how are the outputs looking. And the outputs for Ottawa and the country are definitely more voluminous than they've been historically. But there's still what I would say a scarcity of those oak trees versus those willows.
Yeah, interesting. And the last question maybe for today, as we look forward to 2022, thinking about Ottawa's technology sector in specific, are you more optimistic or less optimistic in terms of our ability to continue, as you said, to hit those build companies, I guess, grow companies to 25, 50, 75, 100 million? More or less optimistic?
Far more. And ironically, it's because if you think about the components, which are people, like experienced people and truly talented, we now have access in a normalized way, in a cognitive mental model, normalized way. It's no longer about gene pools that are just in your neighborhood. And it's been normalized now that teams are going to be hired throughout North America. Yes, it's going to be more competitive as well, but I do think that those who have that nugget of goodness, that founder team, that really great innovative idea, can now access talent virtually anywhere, more normalized than they ever could before. So whether you're tiny and hiring people in Toronto or Vancouver or Boston or wherever, so talent ultimately is what leads to success, and having better access to the best. Now, it is more competitive, so that's a kind of counterpoint. But Ottawa, and this, Michael, has one of the best quality of lives in the world, and that's on many, many, many rankings. So I think we're going to get an influx of people here to live here, and I think we're going to get an influx of opportunity and innovation. So I've always been an optimist, but I am more optimistic about Ottawa's ecosystem than I've ever been.
That's great. Great to hear that. Andrew, thanks very much for joining us today. We appreciate your time. Take care, and all the best for 2022.
Appreciate it. Thank you.
That was Andrew Waitman, once again, the CEO of Assent Compliance, zooming out and helping us understand, the trends that are going to shape the technology sector on a global basis, and then bringing it home back here to Ottawa. As we wrap up, let's recognize the sponsors of Techopia. Here they are. Techopia is brought to you by many great sponsors, such as Number Crunch, offering virtual CFO services for SaaS companies; Pearly Robertson Hill and McDougall, a leader in business and technology sector law; TD Bank, specialized programs for technology companies;
the University of Ottawa Faculty of Engineering, creating the next generation of technical talent. Techopia is not only a podcast, we post new articles daily at obj.ca/Techopia. If you're on Facebook or Twitter, you can find Techopia at Techopia, OTT. And if you're on YouTube, please subscribe and click the bell icon.